Hello traders, welcome back to the channel. André Cardoso here, sharing some insights in the Forex market for you, and of course always tracking the patterns and the advanced pattern formations the market may form. That's the main goal or the main objective in the channel, is to get you synced with these harmonic patterns or advanced pattern formations. So let's start with the DXY as usual. I have an extended list to share with you for today. I will try to go in a fast mode and always try to to provide you with valuable information or useful information. So that's what you need to judge. So, but let's start with the DXY. Nice fight at this fractal support level. We have been calling your attention to this $100 support. We have also a pattern projected right below the support level. So we also need to pay attention to this crab pattern at $99.81, the golden Fibonacci extension level. So at this point, it looks like we are inside what we may call a descending wedge. If the DXY starts to pull back again or starts to, to trade or approach the previous support level, we have a new fractal at $100.21. It may print a new lower low. That's the objective. I need to see the DXY approaching these 99.81, even though it looks like a descending wedge for the DXY. Actually, if you go, I shared this chart moments ago. If you go into the silver chart, you can see basically very similar situation, of course, inverted. The DXY is still fighting the major support level. If the price approaches this 99.87, we will be here for sure discussing this pattern if the price approaches these levels. But also pay attention to this fractal support level. I believe it's important to keep tracking at least. The pound, we have a nice new daily fractal resistance, 133.40. We're still inside what we may call a nice ascending channel, a nice ascending parallel structure for the kiwi, for the cable. So pay attention to this structure. Actually, we are retesting the previous structure highs. So this previous resistance it's now acting as element of support or pressure. So which means the market can actually keep trading higher if the price respects this previous resistance level. The euro versus the dollar, something that can start to unfold. It's kind of a head and shoulders pattern. We may see this as the head of the pattern. Eventually, we have a new support at 110.80. So eventually, the formation of the right shoulder, and if the price starts to pull back again, so we will also pay attention to the potential head and shoulders pattern formation. The Aussie fighting the major resistance level. We call your attention to this eventual, a nice V-shaped recovery, but we may also call it a kind of a cup and handle pattern formation. Eventually, if you increase your time frame, you can also call this a inverted head and shoulders if you wish. So that may suggest more upside momentum for the Aussie. But at this point, and that will also depend on the DXY. If the DXY keeps trading higher, of course, the Aussie may suffer from that move on the DXY and starts to retrace. But this pattern suggests a move to the upside, so we also need to pay attention with that possibility. Even if the price pulls back again, we should pay attention to the clear violation of this resistance level. We should pay attention to a move to the upside for the Aussie. The same may happen for the Kiwi. A move, breakout above this weekly fractal resistance is my expectation. I have patterns projected at 63.47 above the fractal resistance level. Even though, pay attention to, of course, this major resistance. We're still fighting this. Actually, we have a new daily fractal at 62.68 for the Kiwi, so pay attention to that fractal resistance level. Only a violation of that level will trigger that move to the upside. If the price keeps respecting this daily fractal resistance, at some point the price may suffer pressure to the downside and break below the support. As you can see, we have also the monthly fractal resistance for the Kiwi right here from June, and we have a new fractal support nailing that monthly resistance level. So if the price can't find a way to to trigger more momentum to the upside, at some point it should break below or recover again the monthly fractal resistance. Dollar versus the Canadian, of course, synced with the move that we expected to the upside for crude oil. We still expect more momentum towards 74.60. That's my expectation based on the edge and shoulders pattern format below. So if I expect more momentum to the upside, and we should also pay attention to these structure lows. So we are now fighting previous structure support, acting as element of resistance. So, but I do expect a small move towards 74.60. If the price achieves these levels, I will consider a potential pullback or a significant pullback for crude oil. If you extend this previous channel, you can see there's kind of a convergence between what we call the regression trend of this momentum of this descending channel. So that's the midpoint, basically the midpoint of the channel. So we have also that 74.62 pointing to this structure of the channel. So I will expect some pressure to start to emerge if the price achieves this level. So I do expect momentum to the upside for crude. So I will expect more bearish moves for the Canadian. So we have also a level that I think we should pay attention to. Actually, there's always two levels that I pay attention to. The golden Fibonacci retracement level 135.16, and ultimately in the extreme level, the 78.6% Fibonacci level at 134.81. So those are the let's say the two levels that I will consider. And the first one, of course, the golden Fibonacci retracement level 134.16 may, let's see if it will put some pressure for the dollar versus the Canadian. We have also a trend line support right there approaching to these lows. So I will pay attention to this golden Fibonacci retracement for the dollar versus the Canadian. We have also dollar versus CHF, and attention to this one, because beside the bearish pressure and the sentiment for more bearish momentum for the dollar, we have also what we may call in the future a potential technical double bottom. And this is very clear. We have a resistance at 85.49 acting as a neckline. So if the price breaks above this resistance, it may trigger a nice move. It's a reversal price behavior. We always have a default projection for those patterns, and that's one of the reasons why I invite people to subscribe my newsletter, because through repetition, you will, for those who are learning process, of course, you will learn how to identify those patterns, and you will, above all and most important, you will learn how to measure your risk and your potential profits or targets. So that's important for those who are, and again, I try to underline this, it's important for those who are learning process in the beginning of this journey trading the financial markets. It's very important to learn the patterns the market forms. That's the only way that you are able to control your risk, and that's the only thing that you can control in the market. It's the risk that you want to use in the market. So basically, it's important to consider those patterns, and this is what we may call a reversal price behavior. Norwegian krone, we have also a new fractal support. Actually, we can see this previous support level, this weekly fractal level 1044 being retested again. It may take a few moments to break these levels or to decide what to do. At this point, I will consider more sideways moving process. This is something that can happen also for the Norwegian krone. So pay attention to the levels. Fractal resistance at 1056. Support, major support, basically it remains the same, 1042. So if the price breaks below these levels, of course you already know what to do. The price may trade even lower. The Mexican peso, edge and shoulders pattern formation. I shared this pattern on Twitter, so if you are not following me on Twitter, you can always do that. I always share some patterns there also. So breaking above the daily fractal resistance, triggering this pattern, this inverted edge and shoulders formation. So I will expect, this is not something that I'm trading at this point, but I will expect the Mexican peso to trade the 200% Fibonacci extension 1966. That's the default target for that edge and shoulders pattern formation. So we have also a nice cluster that we can project above between the default target for the pattern and the golden Fibonacci retracement 1973, a few points above. Now let's go fast into the Japanese yen pairs. All of them bounced from from the expected price zone that I showed before. The dollar versus the yen, 140.68. The bullish alt pattern was completed. We expected that move to the upside. We have a new fractal resistance, 144.44. We have also the Aussie versus the Japanese yen, the golden Fibonacci retracement 93.80, providing nice support for the pair. We have a nice move to the upside, and we have also a new fractal resistance at 98.30. Nice move to the upside also for the Aussie. The euro versus the Japanese yen, 155.45. Bullish pattern completed, and also a new fractal support at 161.15. The pound, this is also the golden Fibonacci retracement. Somehow I deleted this Fibonacci level. 61.8% Fibonacci level, 185.16, providing nice support. Actually, the market formed a new fractal at 183.75. We have a new fractal resistance at 192.30, very close to the previous highs in weekly fractal, 193.48. The New Zealand versus the Japanese yen, also very similar situation, a new fractal 86.25. The gain, again, I somehow deleted these retracement tools. 86.32, 61.8% Fibonacci retracement level. Also for the Canadian, a nice bounce after the formation of this support at 102.80. We called your attention to that fractal before, below the golden Fibonacci level, and in fact, as you can see, nailing or very much close to the 78.6% Fibonacci level. So as you can see, all those Japanese yen pairs bouncing from the golden Fibonacci level, some of them, or the most of them, and we have also the Aussie, the dollar, and the euro versus the yen completing those bullish harmonic patterns. Some of them may unfold into, and that will depend on if the price breaks above these previous highs or not. But this can unfold into a nice ascending channel. We have nice resistance holding these highs, if confirmed, of course. But based on what we have, this may unfold into a nice ascending channel, at least for the pound versus the Japanese yen. Let's see if we have something clear for. Even for the pound, the New Zealand versus the Japanese yen. Note that we are now facing the regression trend of that ascending momentum, or this ascending channel. So pay attention to these levels, specifically the most recent fractal resistance levels for all of them, and specifically for the pound, pay attention to the major resistance a few points above. And well, that's what we have. And the euro versus the yen, it can unfold into a triangle, more sideways inside this range. So pay attention also to this possibility.
Hi, my name is Blake Morrow, president and co-founder of Forex Analytics. If you're watching this video, that means you're in search of a trading coach, a personalized coach that can help you get to where you want to get in the markets. Whether you choose myself or one of our other well-qualified coaches, it's up to you. Every one of us comes from a different background, and every one of you looking for a coach comes with different needs. So make sure you go through, peruse all of our coaches, read their bios, watch their videos, see which coach is going to be best suited for you as an individual trader. And I'll see you in the coaching session.
Euro versus the pound. Bearish flag pattern. We call your attention to that possibility, a clear violation of this structure triggering this bearish momentum to the downside. We have also the euro versus the Aussie, the edge and shoulders pattern formation that we shared before. We are already trading the default target for that pattern, the 200% Fibonacci extension level. So pay attention to further downside momentum. The same for the pound versus the Aussie, edge and shoulders. I will expect momentum to the downside towards the 200% Fibonacci level, 193.12. I want an attack to this previous fractal support, unless the market unfolds into another inverted edge and shoulders. We need to see how the price behaves at this fractal resistance. As we can see, the most recent highs for the pair, nailing the monthly fractal resistance, in fact, which comes from March 24, so actually the first days of the month. And this is the monthly fractal resistance that we are now facing. So pay attention to this controversial price behavior for the pound versus the Aussie, edge and shoulders followed by potential or eventual inverted edging shoulders again. Let's see how the market unfolds. Pound versus the Aussie, expanding triangle, eventual edging shoulders. The price, if the price starts to keeps extending, you know, inside this range, this pattern starts to vanish. We need to see a clear violation of this daily fractal resistance on a very short period of time, or let's say a short period of time in terms of layout. Let's say for the pattern, we don't want to extend, you know, the time to form the left shoulder, and comparing with the time needed to form the right shoulder. We always try to sync those shoulders and the time they need to form. So basically, if the price keeps extending inside this range or moving sideways, that pattern may vanish, which may increase the possibility for more downside. Let's change to the commodities. Nothing to say for the gold market, new historical highs. Basically, we have a new higher high, 26.31. Nothing to say specifically for the gold market. We have been calling your attention after the violation of these of all these channel, after a clear confirmation of this breakout of the channel. We have been calling your attention to that move. The silver market, after completing this very sharp pattern last week, we called your attention to this. Actually, I published this on TradingView, expecting, you know, at least a move towards a 38-50% Fibonacci level, 29.78. So the market nailed the 38% Fibonacci level, and after that, it has found support and printed a new higher high for silver. So basically, we have a new higher high, new fractal resistance at 31.43, potential ascending wedge, as I called your attention at the beginning of the video, inverted with the Dixie. So let's see if silver keeps trading inside this wedge formation. We already covered crude oil, SPX 500, new historical highs already printed. We have a new fractal resistance, a new daily fractal at 57.47. Pay attention to this ascending wedge, very similar and inverted with the Dixie, and very similar with silver also, just as an example. The German DAX, potential cup and handle pattern formation. Let me measure this pattern for you. Let me change into a line chart. Pick your extension tool and measure from the lows to the highs and search for that 200% Fibonacci extension level. So, and as you can see, that points to 19,665. That's a default target for that pattern, 60, 70, 65, whatever. That's the default target for that cup and handle pattern for the German DAX. Let's see how it will develop. But as you can see, we have now the 38% Fibonacci level right there, acting as potential element of support. 19,719 or 18, actually 18,719. That's the recent. That's a support for, that's a 38% Fibonacci retracement, acting as support for the German DAX. The BUND, we called your attention to this momentum to the upside, this ascending channel, and we are now, as you can see, the market has bounced from this structure support level, rejecting the idea to break below. Even though you should also pay attention to this trendline resistance covering these highs at this point. This may unfold into a triangle even though we should pay attention to these levels. Resistance at 135.45, weekly fractal resistance. We have a new fresh support at 133.89, and of course the major support at 133.13. So at this point, we should also consider the eventual edging shoulders pattern. This may act as a neckline for the BUND. So 133.76. If the price breaks below these levels, we should target the 200% Fibonacci extension level. Pick your tools, change into a line chart, and measure your targets. The BUND, very much a similar situation, approaching the support level of this ascending momentum. We have a trend line support. We have also a nice triangle information above this daily fractal support level, 114.16. We have a range well established. Can extend these to this monthly fractal resistance, still under pressure. So 115.03 monthly fractal resistance, and the recent support 114.16. So if the price breaks below these fractal levels, that may trigger, you know, a breakout of this structure, and if that happens, you should target the next pressure levels. In this case, the next Fibonacci levels come at 113.22, 112.14, and so on. If the price keeps breaking those levels, you should target the next one. So the next level of pressure, if the price breaks below the support level, the Fibonacci retracement level. I don't have anything specifically to say for Ethereum at this point. I believe this is an extended period of consolidation. Let's see how the market unfolds from here, but this can actually be, I'm not sure if this will be the top, we need to wait and see, but if that's the top for for Ethereum, this can unfold into an extended period of consolidation, moving sideways inside that range. Bitcoin's a bit different, already approaching the previous structure highs. I think we should wait for at least 66.74. I think I projected that pattern before for you. So I need to see Bitcoin extending above the resistance level. If the price breaks above that resistance, that will put the price very close to complete this bearish alt path pattern. So that being said, that's all for today. I hope you enjoy, and I hope to see you in the next video. Have a nice trading week.